Senator from New Jersey.
Mr. President, are we in a quorum call?
We are.
I ask a quorum call be vitiated.
Without objection.
Mr. President, I rise today to speak in opposition to the confirmation of Jay Clayton as chair of the U.S. Securities and Exchange Commission. Just 100 days into the Trump administration, and the truth is becoming crystal clear to the American people. There is no America First policy. And there certainly is no middle-class first policy. There is just one policy, and that's a Wall Street first policy. It's a policy designed to steer even more wealth and more power to those who are plenty wealthy and plenty powerful. A policy built on the misguided view that our economy does better when banks do as they please, when CEOs receive runaway pay, and when bigger profits never translate into bigger paychecks for workers. That's why we've seen no executive orders designed to hold big banks accountable. No executive orders designed to protect borrowers from abusive student loan companies. No executive orders helping more workers save for retirement. Instead, we see the administration rolling back protections for consumers and students and seniors, actively exploring how to put taxpayers back on the hook for Wall Street's recklessness, and ordering oversight agencies to quite simply conduct less oversight. And there's no greater example of the Trump administration's Wall Street first policy than its decision to nominate Jay Clayton as chair of the Securities and Exchange Commission. The SEC is our federal government's cop on the Wall Street beat. And let's remember why we have a Securities and Exchange Commission and why it needs to be the cop on the beat. In 1929, the stock market crashed and our nation was sent into a deep and devastating depression. That's why President Franklin Roosevelt signed financial reforms into law aimed at curbing rampant speculation and risky behavior on Wall Street. And the creation of the Securities and Exchange Commission was one of those reforms. The SEC was designed to enact safeguards and promote fairness in our markets, to protect investors and prosecute fraud, and to ensure our business have access to capital so they can grow and create jobs. When we have a watchdog ensuring that everyone plays by the rules, risk is more distributed, markets are more stable, and capital is more available. The American people know all too well what happens when we take our eyes off of Wall Street. Not even a decade has passed since the worst financial collapse in 80 years put taxpayers on the line for billions of dollars in bailouts. In the years leading up to the crash, our regulators, including the SEC, turned a blind eye to excessive risk-taking and corporate misconduct. We needed a cop on the beat, but instead we had a regulator asleep at the switch. And as a result, we suffered a crisis that cost 8.5 million Americans their jobs and 10 million Americans their homes. 8.5 million Americans their jobs, 10 million Americans their homes. A crisis that destroyed $19 trillion in household wealth and left small businesses devastated nationwide. A crisis that sank local and state governments into a sea of red ink. And of course, it left us with the Great Recession. It took us years to dig this economy out of that ditch. Now, after all we've been through, is it really time? Is it really time to go easier on Wall Street? Since the financial crisis, the SEC has been instrumental in reshaping the rules of the road and holding corporation wrongdoers accountable. Now, less than a decade since that devastating crisis, this administration wants to give the keys to the castle to one of Wall Street's most loyal guardians. We need someone at the helm willing to root out bad behavior in our financial sector. But Mr. Clayton is not that someone. He is no expert in enforcing the law. Indeed, Mr. Clayton has made a career out of fighting the SEC and other financial regulators on behalf of Wall Street's biggest institutions. His resume is built around defending Wall Street's most notorious offenders from ever being held accountable. So let me again remind my colleagues that the SEC was not created to be Wall Street's support group in Washington. Investors and the American public at large deserve an SEC chair who will fight to hold firms accountable, who will prosecute misconduct and wrongdoing, and who will improve investor protections. Mr. Clayton has not met that burden. Now, there are three reasons why I'm concerned that an SEC led by Mr. Clayton would be an SEC that bends the rules for corporations and ignores the needs of hardworking Americans. First is Mr. Clayton's singular focus on corporate bottom lines. When asked to lay out his vision for the agency, Mr. Clayton offered no path to preventing another financial crisis. He provided no commitment to strengthening the agent's enforcement abilities, and he callously overlooked investor protections. Mr. Clayton failed to give an iota of support to anything other than boosting corporate bottom lines. He spoke exclusively about reducing compliance and registration costs for companies. And that's all fine, but not at the expense of critical investor protections and of a healthy, stable, and fair market for the economy at large. Let's remember why this is important. Without strong protections and disclosures, we will sacrifice investor confidence. And when we sacrifice investor confidence, less capital will flow through our markets. And when less capital flows through markets, businesses will struggle to grow and to innovate. In other words, a stable and fair financial sector is vital to our economy as a whole. My second concern involves Mr. Clayton's potential conflicts of interest. Mr. Clayton has spent his entire career representing big players on Wall Street before, during, and after the crisis. His work has undoubtedly produced many conflicts of interest. As a result, Mr. Clayton will be forced to sit out of numerous important decisions integral to the role of the SEC chair. This is a problem because the SEC currently has just 2 commissioners. The absence of Mr. Clayton could very well undermine the agency's ability to prosecute wrongdoing on Wall Street. And finally, I was alarmed by Mr. Clayton's refusal to answer any questions of substance during his confirmation hearing. When asked if he would implement congressionally mandated rules, like the provision I wrote into Dodd-Frank, requiring corporations to disclose how much money CEOs make in comparison to their employees, Mr. Clayton gave no straight answer. When asked if he would fairly consider the 1.2 million comments, the greatest number of comments ever received on any SEC rulemaking process by the SEC, urging that companies disclose their political spending, Mr. Clayton gave no straight answer. And finally, when asked if he would restore the subpoena power of the SEC attorneys so that they can initiate investigations, Mr. Clayton showed his true colors. When it comes to enforcement at the SEC, he said we had to be, quote, mindful that even the commencement of an investigation can have significant adverse impacts on public companies. So instead of explaining his vision as SEC's chair and the SEC's role as a cop on the beat, he said the agency should consider a company's bottom line before investigating potential wrongdoing. And this, to me, is in essence what defines this nominee's approach and this administration's approach. Wall Street profits that prevail over Main Street protections, no matter the risk posed to the American people. It is precisely this kind of thinking that made our system too vulnerable to a financial crisis of epic proportions. Given Mr. Clayton's inability and refusal to answer basic questions about important issues, like whether he would restore the authority of the Securities and Exchange Enforcement Division, or implement the CEO to worker pay ratio rule mandated by Congress, or require disclosure of corporate political spending, 1.2 million citizen comments, greatest in the history of the SEC, or ensure retail investors receive advice that's in their best interests, I can't help but conclude that Mr. Clayton appears better suited to continue representing Wall Street rather than to working on behalf of the American people. The President's nomination of Mr. Clayton is a bow to Wall Street and a cold shoulder to hardworking middle-class families. I will not be voting for his confirmation. And with that, Mr. President, I yield the floor.
Senator from Virginia.